so we're going to get into my setups that I took over this past year, early in the beginning of the year. I had a couple of life situations happen to me that prevented me from actually progressing in my trading career. It's very sad, but this year it's going to be different. But nevertheless, let's jump right into it. Alright, so we're back. Now, we're going to identify type 1, type 2, type 3 setups. Right off the bat, we have GJ. This is current day, Tuesday, just for example, whatever we could pretend. We have our Asia range right here, right at 3 a.m. That's when I wake up. We caught the second leg right after 3:30, happened around 3:45, which is perfect. That is the Brinks trade, which was a type 2, actually. A type 2 on the bigger structure. This would be like a weekly cycle type 1, but for intraday, for the heck of it, it's a type 22, type 2. When it hits the high, maybe even a 33 trade, I should say, hits the high 3 times. And I was able to get right off the bat 55 pips, give or take up with the added second position. Let's go to the next slide. We have gold, and with gold we were able to catch this trade, a type 2, actually a type 133 again, for the buy late in New York session. And with these candles, these are offline candles, point and figure. They're just a different variation of RENKOs, but I was able to identify the low, the peak formation with a wolf wave pattern. Now, again, this is a type 1 pattern on gold, where the market left the Asia range immediately in 1 push, 2 push, and 3 pushes, and gave out a M formation, sideways consolidation, and then it proceeded with the day with a slow grinding trend, which was okay. Then market came back to that intraday high and gave out another M formation. So this would have been automatically considered a type 22 trade, because we have another structure of the M forming in the beginning of the New York changeover. Now we have point and figure charts again. This will be a type 2 22, because we have our first M formation over here, and then market came back up and put another M in, and then very late in the New York session they wound up giving out, maybe you could say, a 33 M structure, but nevertheless peak formation. Now with GU, we have our Asia range breakout. Automatically we'll consider this a type 1 formation, and for some odd reason I had the Asia mid-range bars extend out all the way up until New York, which is fine, that's okay. But whenever the market comes into another session and tests the high and doesn't fail, then we could be considering a type 22, where there's 2 sessions, and I was able to profit 100 pips with many positions on there. That's nice. I would like to add that this is another pair. This is the same pair GU, but just days. Well, heading into Friday, the market did another 22 on a bigger weekly structure. These blue dark lines is our PSR, and you can just see that when you are a swing trader, you are able to focus on just a few pairs and focus on the weekly structure being formed out, and you can actually see the market makers. You'll have the opportunity to make sense of what they're doing with these formations, and I was able to comfortably put my stop losses well above 50 pips, and still add on positions. And this was a nice trade. GU was in a consolidating range. It was on a weekly structure, not an intraday, but it was on a weekly. They were just working the highs during this time, and I was able to identify with these point and figure charts that, oh wow, the market gave out a type 2, if you will, scenario at 3:30 a.m. I was able to catch the second leg of the cycle and profit tremendously, 500 pips in one day. Just adding in positions on my broker, David, FX Glory. Yeah, they were really mad at me. They did some shady stuff and played in my head. But this is a type 1, nevertheless. When you have a pair that's consolidating on a weekly structure, you'll be able to identify the swing points, trap patterns very, very well. Alright, so we have the exotic pair GBP NOK. For some odd reason, I was not able to catch the second leg before the 3 a.m. Gap time. But this is an example where you'll have a type 2, almost a type 1. A type 1 is when they actually leave the Asia range. The market, whoever's handling this market, they're doing a very beautiful job. They had a tight Asia range to start the session. They broke out. So you can say, yeah, this is, if the box was over here, this would be a type 1, but nevertheless a type 22, a type 2. And you could see the previous day on Wednesday, the market gave out a type 2 as well. And you don't really need all these indicators and lines. You just need to identify the pattern, and you're going to do that with RENKOs. That's what I'm telling you, RENKOs are the cheat code. This is a trade on GU where I was able to identify with the help of an indicator called EFC. If you look on eBay or any various forms on Google, you could probably get it for free. But this is a type 2 M structure. Now, given that the fact that we have this big structure of consolidation and a peak formation head and shoulder, this would probably not be a good idea to sell. But nevertheless, I was able to profit off of that structure being formed. Maybe for the short term, I don't know. So yes, I was able to profit off that trade, and I was able to net 84 pips, killing GU. With GBP CAD, I was able to identify a type 1 late in the, well, kind of late, but it's in the middle, probably 2 hours within the London session, the type 1 M being formed. Now, I don't trade around this area. I like to wake up around 3 to 3:30, or stay up till 3:30 a.m. and just go back to bed if I missed that. That's why I took the screenshot, because I was kind of mad, because I missed out on an opportunity to make 200 pips. Very easy money. But hey, on that same day, I was able to identify on GBP-CHF the type 1 late in New York for the reversal trade. And then our friend GU, I think this is the same trade, GU, yeah. Got my little 72 pips already, just because I had all those pairs on there, decisions on. So for GU, this is a breakout or a late pattern that happened in late previous session in New York. Whenever you have a market that vectors, that does 1, 2, 3, wait for the market to consolidate for the reversal up. And that's what I like about RENKOs, or these type of RENKOs that you get from OVO, is that whenever the market pauses and goes sideways, you know that it's for a reason, it's for a purpose. And then when they stop hunting and immediately keep on going down, you know that it's a continuation, and you don't have to threat, you don't have to be in fear are missing out on a trade opportunity just because that they offsetting the market cycle on purpose. All right, so if you do bless yourself with these wrinkles, you are able to zoom in and they automatically calculate on how the pair moves and everything, so everything will be neat. But then again, you don't want to confuse yourself with these indicators. This is a peak formation. The line is part of the ZUP harmonic pattern scattering. You don't need that because obviously you can see if you wait. This is the weekly cycle, not the intraday cycle. I was focusing on the weekly cycle, trading, swing trading, and these indicators, these wrinkles, shows the cycle very beautifully. And I was just mad because I didn't hold that position, even though I netted 127 pips. I was just mad that I was able to book 400 pips just from a Thursday to Monday. So in this frame, I got tired and was able to identify a sell opportunity after the gap time. You could say a 22. I'm not 22. A type 2 setup. You have your M, and I was able to book 115 pips. All right, for this chart example, I think this is when I started losing my way because it kept on adding indicators. You see that now I have the TDI in there. Before I didn't need the TDI to be able to trade the pattern that will happen on the intraday cycle. I started adding more math lines and higher high, lower lows. This is when you start winning, you start to get cocky, and you start adding more visuals instead of just taking the tools off the chart, because you're recognizing the pattern, the price action. That's what's most important. All this fancy other TDI and stuff like that, you're supposed to get rid of that as you progress on with your trading career. Don't add stuff on. You're supposed to take the stuff away. Again, this is another example of me being cocky. I went to US oil, and yes, I was able to identify a nice structure to get on, but as you can see, look at my entry. I'm starting to get more sloppy with my entries, even though I'm trading the weekly cycle. But my entries are kind of off because my other trades in the beginning of this video, I'll be taking the M's, the second legs of the M's beautifully, and just stacking positions on. And take note that my position was 0.1. If I was very confident in this trade, I would have been in this pair heavily. Alright, this will be an example of a 33 at the end of a cycle, where you have one push, second leg, two push, second leg, and then after level 1, after they're trapped, they're going to level 1 consolidation. You want to identify the straightaway trade. They'll stop hunt, and then boom, they took off, and I was able to capitalize 100 pips off of that USDR. And then, so again, retouching on not adding so much on your charts. This is kind of good because this, like I said, this is on the weekly cycle. But when you're beginning, you don't want to do this because you have to wait almost 2 to 3 weeks for these setups to develop for the swing trade. This is XMR, and these boxes are just, the white lines are the monthly box. The red line is just the median or the high of the current month, and low and so forth. Because you do want to buy low and you do want to sell high, and you want to be able to visualize that on a monthly or weekly scale. So buying low at the month, I was looking for opportunities, but like I said, you don't want to do this when you're beginning. For this trade example, we have GBP DKK, and I was able to identify late in New York the second. Actually, I remember this trade vividly because I thought this was a type 1, which was a type 1, and then the market came back up and issued a type 22. I didn't get scared. I just understood when they failed to take out this high. Even though if they would have, my stop loss was like crazy anyways. I wasn't fearful of that. And I understood that with these Murray math lines, the greater the number, the more the chance that the market would fall. You don't need that. I don't need this. I don't need none of that. But nevertheless, like I said, we're here to identify the type of setups that will happen, and that was that. For NOC, these are one of my favorite setups where you have your Asia range, the shadow box comes in, you see the consolidation, you know what's to come when they consolidate like that and then gradually stop hunt like that. Sadly enough, I wasn't able to participate in that trade, but I was able to find an opportunity in USD ZAR where they consolidate they had a good amount of consolidation, and the market maker was just stop hunting down, and you could tell like he couldn't go any lower because he didn't want to release all this money that's down here. If he went, he would have to reallocate some money, whatever. But I was able to identify that type of structured behavior and go for the buy. So I think I'm gonna end it right here. This is another type 1 late, almost late in the London session, where the market immediately comes out. They did some foolery, some tomfoolery, but like I said, you wait for the so you'll be able to wait for that. And I was just mad that I missed the opportunity. But these are like a few trades that I wanted to capitalize on. Come on, because like look at that. The market moved 300 pips in one day. That is astonishing. This screenshot here is to represent the Euro MXN on a weekly cycle basis, and I was just dumbfounded on how the market can move like around. This pair can move 100, 200, 300, 400 pips all in one day. And this is the weekly cycle basically. You have the high of the week, boom, the market drops well over the ADR, not 3x ADR, but I'm pretty sure the daily ADR, and gave out a type